Let's focus on our first corporate of the day, Jindal Steel and Power. We're talking about a lot of factors, of course. Global steel prices are in focus as well, while domestically as well, we have seen some issues in the past, especially the liquidity crunch. We have Naushad Ansari, joint MD of Jindal Steel and Power, joining us. Mr. Ansari, good morning. Thanks a lot for joining us. I first wanted your thoughts on a news item that Nigel had alerted us. NHPC will be cancelling 2,520 megawatt bids under power purchase agreement. Now, I understand that you had one project under this. Does it stand cancelled?
No, as of now it is not. It doesn't stand cancelled. I think they are still discussing about where to sell that power and so on. So that discussion is already on. I believe that I think the issues were somewhere that the price which were agreed upon was little more than what was there for the last time, and that's something which is also, I believe, is under discussion. So they will take a call on that. I don't really believe that they are really going to cancel it unless they have fully tried out different options.
But there is a risk of cancellation now on the table.
No, I think there is a delay which is there. We expected it to be already operational. In fact, the entire thing was supposed to have started sometime in October. So still it is possible that they start in October. All that I'm saying is we expect some more clarity to come in the next couple of months.
Okay, so in the next couple of months you expect more clarity. Mr. Ansari, good morning. I wanted your thoughts on what's happening with steel prices. Compared to Q4, has there been a correction in domestic steel prices, and should we expect some more pressure because of the way the monsoons may pan out? I mean, there is a sense that there could be a delay in monsoons, etc. What kind of impact would that have on prices itself?
So compared to Q4, in this quarter, of course, in the earlier part of this quarter, the prices were under pressure, and I think the major reason for that was that the liquidity remains a major concern. So because of maybe because of the elections and post-election also some decisions which are still required to be done. So we still find that liquidity remains a cause of concern, but our belief is that all the initiatives which have been taken by the RBI and the government in terms of reducing the repo rate as well as using dollar for boosting the liquidity, hopefully in the coming weeks we should see some positive results. And if that happens, then we believe that since the prices are already low at this point of time, any more further correction would not be needed, because that should really cancel out whatever impacts of there from the monsoon side.
So can you give me
by and large, all I'm saying is
no, I just wanted
what I'm
some
saying
details
is the current
on
prices.
Yeah, go ahead, please go ahead.
So I'm saying that the current prices which are there, which were close to about 1,500 or so, lower than the last quarter, we expect it to continue with in this quarter also, and we don't really expect any major reduction in the monsoon period.
Okay. In fact, that's what I wanted to get to. So you said 1,500 was are the current prices that you're seeing, or 1,500 lower than last quarter. What exactly is the domestic price situation right now? And because of this liquidity concern, how much has demand fallen? If you could just quantify that for us over the last, say, 3 to 6 months.
So I think, let me put it like this, if I look at my inventory, the finished good inventory for us is not more than 5-6 days. So in other words, all that I'm trying to tell you is that whatever we are able to produce, we are able to sell that in the market. So the impact, basic demand has not really gone away. The basic demand remains. It's a question of whether the money is available in the market for immediate payment, etc. And that kind of has a downward pressure on the price. But otherwise, the basic needs still remain. For example, the need for the rail, it's still a very high need. Whatever we are able to produce, the railways and the RVNL, they are able to take, or for that matter, even the rebars, etc. We don't have any high stock for that. So the point which I'm really trying to drive at is that we are able to sell our products to a reasonable level. Our inventory stock has not really gone up very significantly or so. In fact, it is at the normal level. And of course, in this quarter, as I said, that the prices are, compared to the last quarter, the prices are lower. But, we really don't expect it to go down any further.
What's the outlook on global prices? There's so much talk between US and China, all the trade issues in general. We had recently ArcelorMittal cutting down production in Europe. They're talking about a somber picture in Europe. Your thoughts on the global picture right now?
So there are mixed issues. So obviously the first issue is between US and China, the trade war which is happening. It's not really good for not only in the steel industry but for the entire business as such, because obviously it will create a lot of issues. The negative impact which we can see, for example, is the exports are becoming a little more difficult, or the imports which are there within the country, we expect more redirected imports to come within our country, unless we take protective action for that. So those are the negative impacts. As far as the demand is concerned, in Europe, for example, the demand has reduced a little bit. You can see that very visibly, that the European demand has come down a bit, and because of that, obviously the export prices are under pressure. But I think you need to understand that for our product, majority of it is within the country, and therefore we are more concerned here. As far as the imports within India are concerned, there are certain worries which we have talked about earlier also. The certain countries which have got this benefit of zero duty import within India. So that's something which is a cause of concern, and also we are concerned about the redirected imports, and therefore a number of actions have already been taken. The ISA and the other steel manufacturing companies, they have all taken up with the ministries to kind of find corrective action, and we are very hopeful that in the coming few weeks you will see some result coming out of that.
Okay, so coming back to the business then, I mean the numbers itself, Mr. Ansari, in FY19, your the EBITDA per ton was at about 11,000 to 11,500 rupees per ton. In FY20, even if prices fall about 5 to 10% on an average, will you be able to hold EBITDA per ton at about 10,000 rupees because of cost savings that JSPL has done?
Absolutely correct. We have reduced our cost at Angul very, very substantially, and also at Raigad, and we have not yet reached the bottom. We still there is a lot of potential for reducing the cost, primarily because in the blast furnace the injection rate of PCI is still at somewhere close to about 150-160 kg. We expect it to take to 200 kg and thereby cut down the cost substantially. So yes, to answer your question, do we expect our EBITDA per ton to be upwards of 10,000 rupees per ton in this quarter? The answer to that is yes, we do certainly expect that to happen.
Okay. A word on your stake in Oman and overseas coal mines. Any plans to monetize that, and if yes, the timeline for that?
Yeah, so that's something which is still ongoing. Once the market demand comes down a little bit, you kind of slow down that process. So we'll see it. What is the right thing to do. Although we are already in very advanced stage of doing it, but we'll see whether we should do it immediately or we should really delay it a little bit. So right now we are not going to give any timeline. Earlier we were thinking in terms of doing it by middle of this year, but because of the reduced demand, maybe we'll shift it a little bit by another quarter or so. So that's the way as far as Oman is concerned. And as far as the African mines or Australian mines are concerned, the Australian mines the African mines, primarily the Mozambique, that's doing quite well actually. I think the more important question which is there is that how we are going to manage our debt. And already our debt is at the level of 39,000 crores, and in this particular year we are very clear that at least by 6,000 crores or so, even closer to 7,000 crores, we will be able to reduce. So somewhere we will be there by the end of this year, about 33,000 crores. And as you already know, last year we had said that we will reduce it by about 5,000 crores, and we have actually done that. So therefore we are very much on target as far as debt reduction is concerned. The other issues, whether Oman or
Sure.
Africa or Australia, what happens, we'll see that, as the time comes, we'll see that.
But Mr. Ansari, how are you confident that you're going to reduce debt by 6,000 to 7,000 crores when there is no clarity in terms of a timeline for monetization of any of your assets, whether it's a stake in Oman or even overseas coal mines? How do you plan to reduce this debt then?
Yeah, because simply we have a profitable business, and the profits which are there, the EBITDA which is there, we should be able to, even the normal repayment also, we should be able to do that. So to come to that level of, let's say, reducing it by 5,000 to 6,000 crores, we don't necessarily have to monetize anything at all. We can actually do it without that. And if we monetize anything, this is over and above whatever numbers we are talking about.
Okay, well, all the best with that. Thanks so much for joining us. That's the word coming in on JSPL, a word on the industry, on the company and their budget wish list as well. We'll take a quick break on that note. The market has flattened out completely now, so it's given up on all of its early morning gains. I think that was expected. It has been a sell-on rally market, and that's pretty much what's taken place. Up next, we'll try and understand the impact of the new accounting norms. Joining in will be Giridhar Sanjeevi, the Executive Vice President and CFO of Indian Hotels. Stay tuned.